Inflation in the United States has set a 41-year record, sitting currently at 9.1%, according to the newest CPI report that came out just a few hours ago. So let's talk about the CPI report, but also how this will affect cryptocurrencies and global markets. Okay, so as I mentioned in the intro, inflation rose to 9.1% in June, which is even more than was actually expected. It's about 0.2% more than what they were actually anticipating. And this is now the third month in a 4-month period that inflation has risen by more than 1%. If we actually take a look here, this is over the course of the last 25 years. You can see the chart of inflation over time tend to typically stay between the 2 and 4% ranges when it comes to inflation. This is probably what you learn about when you go to any type of economics class. They talk about inflation factoring in around those ranges, as that's just the typical rate of change over time when it comes to the value of the US dollar. However, you can obviously see here, just past 2020, there's this massive ongoing shooting up spike of inflation that is differentiating itself from the last 25-year period. Even if we look at the max here as far back as it goes, which looks to be about 1920, you can see there has been historically some major spikes throughout history hitting as high as 20%. This occurred around the end of the 40s into the 50s. Of course, we had the spike in the 80s, and now we're having kind of a major spike now. So over the course of history, at least over the last 100 years or so, we can see that this is definitely not the largest spike we've ever seen in the United States. However, it is the largest spike that we've seen in recent history over the last 40 years or so. Now, upon the news of all this coming out, President Biden actually sent out a tweet. Not sure if he's the actual person managing this account, but there was a tweet for his official account that said, "Today's report is a reminder that inflation is too high. Fighting inflation is my top economic priority, and while the numbers today are not acceptable, they are also outdated. In the past 30 days, the average price of gas has dropped by 40 cents a gallon." So let's go ahead and fact check on that 40 cents of a gallon claim. Now, if we actually take a look here at AAA, you can actually see that the current average price in the United States is about $4.63 per gallon of gas, with some areas in the red obviously being much higher, and some areas here, like in the bluer areas, being a lot lower. If we actually take a look at the history here, it says the month average was about $5.14. So it is true that over the course of the last month, the average being $5 nationwide average, and of course now being $4.63, he is correct that it's about a 37 to 40 cent difference between the average of last month to the current prices. So the gas prices have definitely gone down over time. However, if we actually take a look at the official CPI report that was released, we can see that although gas is definitely a factor here, sitting at about 11.2% inflation over the course of the month, it is by no means the only factor that we have to consider on these charts. Now, on the charts that we can see here, you can see that food was at 1.3%. We can see that energy in general was at 7.5%. Obviously, gasoline being the biggest indicator here, with fuel oil being 11.2%. Fuel oil actually went down negative 1.2%, and you can take a look at the list here. Now, there are a few things that are just not listed on this list if you go and read through the full CPI report. So to give some other factors that are pretty important to most people, we have rent is up 0.7%, baby food 1.1%. A lot of people remember the formula shortages that happened recently. Dry cleaning is up 10.2%. Delivery services, so this would be your Uber Eats, any type of delivery service that you'd be utilizing, 14.4% increase. Car rentals, 3.7%. Homeowners insurance, 2.1%. Dental, 2%. Computers and other computer electronic parts, 1.3%. Auto equipment, 3.2%. And used cars, 2.2%. And ice cream, it's funny enough, is 3.1% on ice cream. So you can see that there is this massive increase across the board on multiple factors that are actually affecting people on their daily use and hitting their pockets on their monthly expenses as well. So although gasoline does play a big picture for a lot of people, especially on the factors they're utilizing, there's other factors that are hitting people outside of gasoline on a daily basis that are also seeing rises well over the 1.3 monthly increase that we saw in June. So if we stay on the current trajectory where we're kind of sitting at now to the end of the year, we're going to be looking at about a 15% inflation rate by the end of this year, which is pretty crazy to think about. So to go back to what we're talking about, it is true that gasoline is down by 40 cents currently compared to last month in June. However, it's not the whole picture just to look at gas and oil, even though it does play a major part of the industry. So we have to factor in these other things that we talked about when we're looking at things like inflation rates. So we'll have to come back in July and take a look at the numbers to see if President Biden is correct and we do continue to see a lowering of gas prices and therefore a lowering of inflation numbers, or if we're going to start seeing some higher numbers as things perpetually continue to increase, it seems, month over month. Now, of course, the US dollar is not the only thing suffering. If we actually take a look here, this is the comparison between the euro and the US dollar over a 5-year period. So you can see slowly over time, the value of the euro compared to the dollar has gone down to the point where 1 euro is now basically equivalent to 1 US dollar. And I've seen this fluctuate throughout the day. So it's been about $1 to $1.01, but it ultimately seems to be basically pegged 1-to-1, the euro to the dollar at current rates, which means although the US dollar is losing value at an insane rate with these inflation rates, it appears the euro has been losing at an even faster rate because it is now equivalent in value to the US dollar, at least on global markets. Now, when we go ahead and take a look at the charts of the US dollar compared to cryptocurrency, we're actually seeing quite a lot of green in the charts today. So Bitcoin is up 3.99%, Ethereum up 5.47%, Matic is up a whopping 17.27% on the day. So we do appear to be having a green day in spite of the fact that inflation numbers are much higher than were originally anticipated at over 9% for the first time in over 40 years. So first and foremost, I do want to say that everything I'm saying in this video is of course not financial advice and is for educational and entertainment purposes only. Now, when it comes to my opinion on the future of cryptocurrencies with the way that inflation has been going, I personally have mixed feelings about this. Now, traditionally speaking, when times get harder, especially as the feds continue to hike up the rates and as inflation continues to increase, that typically leads to a lot more unemployment, which means people are going to be kind of clutching their pearls, less likely to invest, wanting to save money as much as they can and stretch their dollars as far as they possibly can go. This typically means that investment vehicles are typically not going to be utilized or going to be bought into, therefore leading to either a stagnant or a bear market. So the stock market could be affected by this, as well as, of course, cryptocurrencies. However, the other side of me wants to say that as we can see, the euro, the dollar, and several other currencies are also tending to suffer in current global markets. It's possible that people might be looking to cryptocurrency as a form of alternative. So how people as a general populace look at cryptocurrency looking forward is going to be kind of an interesting take. Now, there's been a lot of distrust in things like stablecoins, and as value of fiat currency continues to plummet, people may be looking at things like Bitcoin, Ethereum, or other cryptocurrencies as kind of a hedge against inflation moving forward, as they would rather deal with the volatility of the crypto markets than potentially just the continuous downtrend that is occurring with fiat currencies. Now, I know today's video was a little bit less related to cryptocurrency than it typically is. I wanted to go ahead and pass the question off to you guys as my audience. Do you guys find videos like this talking about the CPI report something that's helpful? I think it's truly important that when we're looking at cryptocurrency that we should just fill into the echo chamber of just talking about the different cryptocurrencies, coins, and tokens, but sometimes it's also good to take a step back into the wider market and see how that could potentially affect the markets that we typically tend to talk about in cryptocurrency. So if you'd like to see more content like this or see me regularly talk about the CPI reports as they come out month over month, let me know in the comment section down below. And depending on how I get feedback on the comment section and how well this video performs, I may do videos like this in the near future. Thank you guys all for watching. If you're new to the channel, don't forget to subscribe to the channel and click the notification bell so you can be notified when I produce new content. Also, whether you're new to the channel or not, I'd really appreciate a like on the video, as that does help the YouTube algorithm, which benefits me greatly as a content creator. Thanks for watching, guys, and I will catch you all in my next video. Cheers.